Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. It's Sunday. I hope you had a great week. I've been out with friends doing a lot of biking and chilling in the outdoors. So I'm kind of waiting to see what the market is going to do. I took a few days off this week. Market has been very slow. It's consolidating, and I still believe that we're going to be seeing upside, but I have to, market eventually is going to show us what it's going to do, and I'm not 100% sure what's going to happen. I want your attention first for Ecos. They're sponsoring this content, and they have some news. The first news is that they launched their ETH perpetuals. So if you like margin trading and you like trading ETH, or you want to have access to trading ETH, that's not possible. So that's a big step. And the other thing is that Ecos will be launching their own token. And it's quite a little bit different than most exchange tokens, because first of all, most exchange tokens that we've seen were some kind of public offering where the tokens were sold for a certain amount of price, or for a certain price. And in this case, they're going to be distributing these tokens for a period of 2 years amongst traders and stakers. And initially, traders will receive the bulk of the newly issued tokens, and then later on, as more tokens have been distributed, stakers will eventually get more rewards from the block reward. I think the idea is that they'll have 21 million tokens issued over a period of 2 years, where there's going to be like a block reward reduction. So every period there will be less tokens. So it's kind of deflationary. And then after 2 years, there will be 21 million tokens, all of which is limited to that exact number. I'm pretty sure they're going to introduce fee structure reductions with it as well. And I think things like airdrops on newly issued assets, etc., will also be part of it. So it's going to be interesting to see how that mechanic is going to play out. I think it's quite different than most exchange tokens. So let's see how that works out, but kind of cool. I put a link in the description below if you want to sub to the email list to stay up to date on this token. I think it's interesting. So thank you, Ecos, again for sponsoring. Then let's dive into Bitcoin. I have a little bit of a weird bug, it seems, in TradingView, where now it's gone. Somehow there's like this. Well, it's gone anyways. So here's the two scenarios. Obviously, it can go up, it can go down, yada 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 yada. Yeah, we all know that. This low here, 43k low, which swiped below here, has front run this high right here. So there's two possibilities. Either this is the final front run, and we're going to see continuation, or price is going to get rejected here at the gray box and then start coming down here, maybe consolidate for a while. I don't know, maybe it's going to happen really quickly. I cannot look into the future. And then price will try and test this little block here before the breakout to almost 60k. I'm not sure if that's going to happen. Like, I do see support at, well, right now around the 48, 47, 49 region. And I see it creeping up every day that we kind of stay inside here. If we do break below, I still, this is my region where I'll be looking to get some serious long exposure again. Right now, I'm kind of like in between. I see a resistance here at the gray box, which is somewhere between 50,800 to 52. I think if we can get a close above 52-ish, that upside continuation is ready. This consolidation kind of starts looking like either like an Adam and Eve, which had a lower Eve, or kind of like an inverse head and shoulders. have to go look at the 4-hour to really see that, but I think this gray box is key. If we claim it, I think we're going to see the continuation to targets that we've been talking about for a long time. So 69.73 would be the objective. Then I've reduced a little bit of my long exposure that I've been gathering inside this consolidation as we reached back into resistance. But if we smash through it, I'll be looking to add on depths. There's a big resistance around 54.55. So if we manage to go above that, any pullback is, in my opinion, a decent place to start adding some exposure. And I'd even say that if we smash through 61, 62K and have some kind of consolidation, small consolidation structure, that breakout of that and a retest is also a place to start adding to longs. And then from there on, I'd personally favor reducing risk again, taking profit, and waiting for opportunities where we maybe perhaps see one of those larger 10, 15, 20, 25% pullbacks. But if we consider this to be our previous range, let's see, can I get some arrows? Yes. All right. So this is the previous range from mostly January, and then this is our Feb-March range. This would be our next range if we claim 61, 62. And that's all the way up to 90K. So I do want to be aggressive once we start breaking structures here. And I do want to have some exposure right now. Been having some exposure, but I just cannot say with a lot of certainty that we do not visit this area. It's just a possibility because we left some, there's if we go there, you got to think like a whale, like a lot of people will panic. There's a lot of people who got into longs here who will actually puke their positions, and maybe, it's still, if you go there, it's 20%. So I'm pretty sure you'll manage to get a lot of liquidations if price actually goes there. So it probably needs a little bit of a bearish catalyst. And if we look at the S&P 500, if that keeps, losing, that's going to be enough of a catalyst. But that means we will have to, we'll have to see bonds keep puking and the 10-year yield keep to stay rising. And I mean, it's possible that we see that. I'm not going to say it's impossible. I think it's just, I just think it's not the most likely. It's not the most likely thing to happen here. But then again, like consensus, usually the market, most market participants are wrong. Maybe I'm seeing it the way a lot of people are seeing it. But like I said, 1 to 2 weeks ago, as we started to consolidate here, I don't think this is gonna consolidate as long as this area right here. So I think decision time will be here this week, and either we see this sell off, and this would be an insane long, in my opinion. Like this would be a gift almost if we get it. And then to the upside, things have to kind of accelerate. Usually they kind of do. So like we're in this bull market, and generally what happens is that the next push is going to accelerate, and we're kind of in between whether we're going to see that or not, because the last rally from that kind of happened in Feb was mostly it was pretty slow compared to the rally before that, but it's kind of similar. Like if I grab this angle here and I pull it to like late November, this rally in Feb is steeper, and what I'm kind of expecting is especially if we see continuation, for that continuation to be steeper than the previous one, and then we're really getting into bubble territory. Jesus, bubble territory. So that's a little bit of a ramble here, but the key takeaway is this region here. So we have these ranges, and the red dotted line here is kind of sitting in between, and we can actually see that price is interacting with it as well. Here was a tiny consolidation of which we saw continuation. We didn't reach the range high, which would have been quite possible, but it was the 2x. The high here was the 2x of this bottom, so fair game to start puking here. And now this structure is gonna show us this week whether we see this continuation or not. So I'm gonna be more aggressive as we trend up and start to reduce risk as we reach 69.73 and possibly, but maybe not straight away, 89.90k. Do we reach this? Maybe. I don't know. Like, just know that it's possible and adjust your risk to the ID and possibility of it. That should be, well, that is my primary objective right now. And then, personally, if we do break out here, I'm not going to actively trade it as much as I've been trading this, because we're reaching bubble territory, and I mean bubble territory could go to 200k, no problem, but an entry right here, I want to ride that momentum, and it's just going to be more vicious faster. So it's not a place where I'd be trying to pick tops and bottoms. I'll probably more and more use a quantitative approach where I just scale out, scale in, scale out, scale in, and manage the risk objectives. So kind of my view on that. And I think ETH BTC, it's still in this is not the original chart I see that we've been using, but the fact that we had this deviation up here and then kind of broke back into this range is just not very convincing to me. And we're seeing some kind of reaction here. This is probably going to chop up a little bit or maybe retrace back into this. So there might be, there is support here, obviously, and there is resistance right here. So there is a play to be made, but I wouldn't be surprised if this goes down, and I'm just not seeing it. So I prefer to, I don't know, not trade it. Maybe it's going to moon without me, and that's fine. I just don't like taking trades that I'm not convinced about, that I don't have a feeling for. I'm just not seeing it. It's just a lot of going up and down, and then to be honest, BTC just looks more convincing. It's more clear to me. Like, we break this range, there is some resistance still above us, but we're getting very close to continuation play, and considering the fact that it's likely to be more aggressive than our previous rallies, I don't, that's where I want to put my money, and where I want to put leverage to generate more BTC than I previously owned. I really think I've said everything that I wanted to say on this market update. I think, yeah, maybe I'll even make like an extra video tomorrow or the day after if we can actually see one or the other confirm. It's going to be interesting to see how the markets open, and see, like, there's one other thing that I've noticed. That's the fact that weekend moves often are wrong. So, it's the easiest way to draw this. So let's say the weekend started on, let's say Friday evening. Friday. That should be the 5th, right? Second. Yeah, 5th. So let's say this is the start of the weekend at 6, like 6 o'clock. I think we used, cyclic. Then we need to go to Friday before that. I think that's the 26th of Feb. 26 at 8 o'clock. Okay, so this is our weekend start. We'll mark it green, slightly thicker. Then, well, let's say the weekend ends at midnight tonight. That would be here. Mark this red. So this is a weekend move right here. Puke. We can move pretty much sideways. We could move sideways down into the end of the week. We could move down, upside after. We could move sideways, not we could move down, a little bit of upside at least after the weekend, and then we could move, and which saw a reversal later on. So I don't know. Weekends kind of have been, maybe it's not a lot of alpha. It's not a huge edge, but they kind of have a sense where we can move down, upside afterwards. So if that is actually what's going to happen, then we'll have to see a pullback. So just so you know, stay aware of that. And if tomorrow is going to be shit because legacy markets keep puking, just be prepared for that. I'm going to leave it at that and make another video on Wednesday. Cheers.